What's up everyone, and welcome back to Explain the Charts. Today is November 10th, 2025, and we're taking a close look at the Nasdaq 100 ETF, ticker QQQ, after a very turbulent week for tech stocks. There is a ton of news to unpack, from a potential end to the government shutdown to serious concerns about an AI bubble, so let's start there before diving into the charts. First, the big story dominating the headlines is the wobble in the AI-driven rally, which led the Nasdaq to its worst week since April. Multiple reports highlight growing fears among investors about sky-high valuations in major tech names like Nvidia, which fell over 7% last week. This was amplified by concerns over big tech's massive spending on AI infrastructure, which could weigh on future profit margins. Adding to the uncertainty has been the prolonged U.S. government shutdown, the longest in history, which has damaged consumer sentiment and created significant market risk. However, there's a bullish counter-narrative developing this morning. News from Reuters indicates the U.S. Senate is moving towards ending the shutdown, which is likely the primary reason the market is looking to open higher today. On the economic front, the data is bearish, with layoff announcements in October hitting their worst levels since 2003, signaling a potentially weakening labor market. So we have a classic tug-of-war, short-term political optimism versus long-term economic and valuation concerns. Now, let's see how this narrative is reflected in the daily chart for QQQ. We can see the market was in a powerful uptrend, recently hitting an all-time high around the $637 level in late October. That peak marks our key resistance level. The sell-off last week, corresponding directly with those AI valuation fears, was sharp and aggressive, breaking down to a low of about $598 on Friday. This $598 to $600 zone is now our immediate and most critical short-term support. The price action here is pivotal. A failure to hold this level would confirm a deeper correction is underway. If we zoom out on this daily chart, we can identify other key structural levels. Below the $600 mark, the next significant support area appears to be around the $580 to $585 range, which acted as a consolidation zone back in September. The most dramatic price action on this chart occurred back in early April of this year. Let's zoom in on that period specifically. Here we can see a catastrophic drop from around $475 down to a low of $422 in just 2 days. This was followed by an incredible reversal with a massive 12% single-day rally on April 9th. This establishes the $420 to $425 area as a major long-term support floor for the market. That level was also tested back in August of 2024, showing just how significant it is for long-term investors. Now let's switch to the 1-hour chart to analyze last week's sell-off in more detail. Here you can see the clear breakdown on November 6th, where the price sliced through the $620 and then the $610 levels with heavy volume, confirming the sellers were in complete control. The decline was relentless until it found some footing around the $600 level on Friday. What bulls want to see is a base being built here, followed by a reclaim of the $610 level, which is now acting as short-term resistance. If sellers regain control, a move below Friday's low around $598 would be very bearish intraday. Finally, looking at the 15-minute chart from the end of last week gives us the highest resolution view. We can see the sharp decline on Thursday, November 6th, followed by a volatile session on Friday, November 7th. Price made its low for the week early in Friday's session, then spent the rest of the day attempting to recover. The price managed to climb back towards $609 by the close, which suggests some dip buying interest came in. However, the volume on that bounce was not overwhelming, so conviction is still lacking. The pre-market action today will be critical to see if that bounce has any follow-through. So let's recap the key points and price levels to watch. Our major overhead resistance is the all-time high around $637. Immediate, critical support is the $598 to $600 zone. If that support fails, the next target for bears would be the September support level around $580. The ultimate long-term support remains much lower at the $420 to $425 level established in April. For a bullish case to regain strength, buyers need to defend the $600 level and push the price back above $610. News of the government shutdown officially ending would reinforce this, making a relief rally towards $620 quite likely, and I'd put that scenario at about a 60% probability. For the bearish case, a break below $598 with conviction would signal the recent pullback is not over. This would be reinforced if more negative news surrounding AI valuations emerges, opening the door for a test of $580, a scenario I'd place at a 40% probability. So, watch the price action around the $600 level very closely at the open. Its ability to hold or break will likely determine the market's direction for the rest of the week. Please remember, this video is for informational and educational purposes only and is not financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you next time.